Hello everyone, my name is Atul. Welcome to my channel. So I hope that the past training videos were useful for you and you were able to clear your doubts. If you're new to the channel, please subscribe to my channel and hit the bell icon. Also, I would request you to please share this video to maximum number of participants, many people, so that everyone can be benefited out of these training sessions. We'll be dealing with article number 23 and article number 26 at the end of the sessions, so that those two special cases we can devote maximum possible time. Okay, in today's session we'll be starting with article number 24. So without wasting any time, let's get started. So we have a case: applicant, bank, beneficiary. Beneficiary has received the guarantee. This is our calendar. Okay, now this guarantee is having a condition that it requires two documents. Number one, demand, and number two, signed unpaid invoice. Okay, now when beneficiary presented the documents, these two documents were presented. Now the problem is this document was not signed. Okay, now what URDG says is you will be having 5 business days following the date of receipt of demand. So suppose your demand was presented on 18th, so you have time till 19th, 20, 23, 24, 25. On or before 25th, you have to either refuse the demand or make payment if the demand is complying. So in this case, since the demand is discrepant, you have to send a notice of refusal. Now how you will be sending the notice of refusal? You will be telling the beneficiary, number one, demand is rejected, and number two, why the demand is rejected. So you have to clearly mention what is missing. The unpaid invoice is not signed. Now these two things have to be clearly mentioned when you are rejecting any demand. Now why these two are required is because beneficiary has already suffered because the applicant did not perform as per the contractual obligations. Now beneficiary, because of some losses he has incurred, presented a demand. If I, being the guarantor, sent a notice of refusal without letting the beneficiary clearly know what is missing in this demand, that would be very unfortunate for the beneficiary, because he would not know in what manner he can claim his losses from the guarantor. So that is why, to help the beneficiary, I have to clearly mention that the demand is being rejected and this is the reason of rejection, so that beneficiary will have a chance to correct the demand and represent it to me. Okay, so this is a case when the demand was being rejected. We have same example: demand is presented and unpaid invoice is presented. This is not signed and the demand is discrepant. So I found out that the demand is discrepant on 20th. Now I mean the guarantor found out. Guarantor decided that let's go and ask for a waiver from the applicant. Now in what cases the guarantor will ask for a waiver? Suppose this bank guarantee has been invoked or a demand has been presented under this guarantee n number of times. So basically guarantor has an idea that applicant is not able to perform under this guarantee. So let's do one thing. This demand has been presented. This demand is of exactly the guarantee value. Let's pay out this guarantee, this demand, and end this transaction. So in that case, guarantor might go to the applicant seeking a waiver. Now the BG mentions these two clauses. Demand which is presented is having this problem, that the unpaid invoice is not signed. Bank identifies the discrepancy on 20th. Now on 20th, bank decides to approach applicant to waive this requirement. If applicant waives this requirement, this entire demand which has been presented by the beneficiary becomes compliant and the guarantor can make payment to the beneficiary. Now, why applicant's consent is required? Because when applicant gave the issuance request to the guarantor, the only condition wherein applicant would be reimbursing the guarantor would be when guarantor pays a complying demand. Now in this case the demand is non-compliant, so if the guarantor wants to make payment of a non-compliant demand, applicant's consent is required. So bank decides to go to the applicant seeking his consent. Bank approaches the applicant on Friday. On 23rd, applicant checks the demand or whatever he does at his end. On 24th, applicant informs the guarantor that my authorized signatory who is supposed to take a call on this is out of town and he'll be returning on 27th. Please hold. Bank says okay. On 27th, applicant tells the guarantor that you reject the demand. Now the guarantor has lost the right to reject the demand on 25th, which was the 5th business day following the date of presentation of the demand. On 26th, beneficiary is to be paid, and on 27th, beneficiary has a right to claim for the payment equivalent to this demand and any interest if beneficiary wants to. What I'm trying to say is, if you want to go to applicant seeking waiver of this discrepancy, you have to ensure that you act within the time period allowed as per URDG, which is 5 business days. If you extend this period, you are gone. So if you have approached the applicant for waiver on 20th, you have to ensure that on or before 25th you get the result from the applicant. Now by saying on or before 25th, that doesn't mean by 25th EOD applicant can inform you. No, because if applicant informs you at EOD or near to end of day on 25th, you will be having no room to inform the beneficiary before end of 25th. So on 26th, you lose the right to reject the demand. Basically that is lost when 25th ends. So if you are approaching for a waiver, you have to ensure that the waiver is received or whatever is the decision that is given to you well in time, so that you can inform the beneficiary as to what you are doing. Okay. Now next case, 20th you went to the applicant seeking for a waiver. On 24th, applicant says I accept this discrepancy and I instruct you to pay. On 25th, guarantor rejected the demand. Applicant says, boss, you found the demand to be discrepant on 20th, you approached me, I told you to make payment and still you went ahead and rejected it. The final call as to what is to be done remains with the guarantor. Whether the demand is to be rejected or the guarantor has to accept the decision of the applicant, final discretion is of the guarantor. So even if the applicant has accepted the discrepancy and told the guarantor to make payment, guarantor can still go ahead and reject it at its sole discretion. However, if applicant has said that you reject it and guarantor paid, In this case, the guarantor will not be refunded by the applicant, because applicant has told to reject the demand, which is the right decision because the demand was discrepant. Guarantor went ahead and paid it. This payment has been made of a demand which was non-compliant. Applicant is not supposed to refund guarantor for a payment done for a non-compliant demand. So in this case, the applicant will not be refunding the guarantor. However, in this case, first case, wherein the applicant has told the guarantor to pay, and if the guarantor listens to the applicant and makes the payment, then guarantor will be refunded by the applicant because applicant has accepted to make payment. Okay, now the same structure which we saw is applicable when a guarantor claims under the counter guarantee. Okay, suppose this guarantee was being issued at the strength of a counter guarantee, then in that case same logic will be applied. Okay, which is if demand is discrepant, you have to clearly reject the demand, mentioning that I am rejecting the demand and what all are the discrepancies. If you decide that you have to go to the applicant or the instructing party seeking the waiver, that entire cycle has to be completed within 5 business days. Okay, now if the applicant or the instructing party tells you or tells the counter guarantor that you go ahead and make payment of a discrepant demand, still it is the final call, or still the final call remains with the counter guarantor as to whether the demand is to be rejected or paid. Now this is in case the applicant gives consent to make payment of a discrepant demand. Okay, now when a demand is discrepant and the documents are presented in paper form, the guarantor can return the documents to the beneficiary, or in case the documents or demand is presented in electronic form wherein the guarantee allows for such kind of presentation, then the records can be disposed of in any manner. Okay, so moving on to article number 25, which is reduction and termination of the guarantee. Applicant, guarantor, beneficiary. Now the guarantee is issued on 1st January, amount is $50,000, expiry is 30th of October. Beneficiary presents demand 1 for $10,000, which is paid. Now the guarantee, the available amount in the guarantee is $40,000. Okay, now next case, this was number 1. Next, what happened is the guarantee had a clause that amount will be reduced proportional to the amount mentioned in certificate from XYZ presented under the guarantee. Now this certificate is presented mentioning amount as $5,000. So after presentation of this certificate, the guarantee value becomes $35,000. Okay, now condition number 3. In condition number 3, the guarantee mentioned that the amount will be reduced proportionate to the amount transferred by applicant to Benny's account held with guarantor. This is condition number 3. First is demand presented for $10,000, paid, guarantee value reduced to $40,000. Second is this condition is mentioned in the guarantee wherein the amount will be reduced proportion to the amount mentioned in certificate from XYZ presented under the guarantee. This condition is there. A certificate was presented mentioning the amount as $5,000, guarantee amount reduced to $35,000. Same guarantee had another condition. The amount will be reduced proportionate to the amount transferred by applicant to beneficiary's account held with the guarantor. As and when applicant transfers the amount to the beneficiary's account, the guarantee value will be reduced. Now, this condition will only be applicable if the account of the beneficiary or the account of the applicant is held with the guarantor. So, the guarantor can see from credits or debits having the guarantee narration, guarantee reference number, that the amount has been transferred. Suppose this amount was transferred by applicant to the beneficiary's account was held with the guarantor, and the narration of the bank guarantee number was mentioned in that transaction. The amount was $15,000. So now the leftover amount in the guarantee is $20,000. These three are valid reduction conditions in the guarantee. Okay, now fourth condition. What happened is, under condition number 4, Benny presented a discharge letter. Beneficiary said that I hereby release you from all the obligations under this guarantee to the tune of $15,000. So, when beneficiary presented this partial release note releasing the guarantor from the obligations under the guarantee to the tune of 15,000, now the guarantee left over, the amount left over under the guarantee is $5,000. This is the fifth way in which the guarantee amount can be reduced, is if the guarantee is having this kind of a chart mentioned in the guarantee terms and conditions itself, that on this date the remaining amount under the guarantee will be this much, on this date the amount remaining under the guarantee will be $25,000. Even though the guarantee was issued at an initial value of 50,000, on these predetermined dates the guarantee value will be reduced. No consent from any party will be required, and the guarantee amount will be reduced in this manner. Now, in what case the guarantee will be deemed to be terminated? Okay, now the guarantee will be deemed to be terminated if the amount for which it is issued, that has been reduced to 0, okay, or the guarantee has expired, or you have been released by the beneficiary before the expiry date. In these three cases the guarantee will terminate. Okay, now apart from this reason wherein the guarantee has naturally expired, the guarantor has to inform the applicant or the instructing party if the guarantee is expired because of any of these reasons, which is the amount has been reduced to 0 because of repetitive demands, or you have received a discharge letter from the or release letter from the beneficiary. Also, regarding termination, what URDG says is any undertaking which is subjected to URDG or any guarantee which is subjected to URDG should not be open-ended unless there is specific condition mentioned in the guarantee which declares it to be an open-ended undertaking. So, in absence of any particular expiry date or expiry event, your guarantee will expire after the lapse of 3 years from the date of issuance, so that your undertaking will be a closed-ended undertaking and your bank will not be exposed to an unlimited period of risk. Also, if your counter guarantee is backed by a if your guarantee is backed by a counter guarantee, that counter guarantee will be expiring after 30 days from the expiry date of your current guarantee. This is again to safeguard the interest of the counter guarantor. Please note, these dates will only come into picture if your guarantee and counter guarantee are not mentioning any expiry date or any expiry event. The motive of having such clause in URDG is to have an undertaking which is closed ended in nature, unless the guarantor consciously decides to keep the undertaking as open ended, whereby the guarantor will be having an open ended clause in the guarantee, which will go like this, that the guarantee will be will expire upon receipt of a release letter from the beneficiary, or the guarantee will expire when a certificate from the beneficiary is presented under the guarantee, or the guarantee will be expiring when the contract period ends. In this case, the guarantor consciously is adding such kind of a clause in the guarantee, so that 3-year period will not come into picture. Okay, so with this we have completed article number 24 and 25. If you have any doubts related to the content explained in this session, please post your questions in the comment box. Have a great day. Thank you.